International stocks, as you know, didn't provide much of a buffer for domestic investors this last quarter. Can you talk a little bit about that and maybe explain why that was?
Yeah, part of the reason you have international equities is for diversification. And in a way it worked and in a way it didn't. So in the first month of the year, again, international equities did extremely well, just like U.S. equities. They were up 5, 6, 7% as well. And they also suffered a setback in February and March. However, it's for different reasons. In the first month of the year, the euro went up about 4%, the pound went up 5%. We had serious currency appreciation overseas, and that was after last year's appreciation. So it made investors nervous. You can't have a currency going up 5% a month. That's just too much. And that really made people nervous that export-centric type companies and even countries like Germany would struggle if the euro were continuing to move up fast like that. So for instance, Germany finished the quarter down 4 or 5%. It was really kind of in the crosshairs of this currency appreciation. And when that happened in January, investors again flocked away from areas of the market, international equities, because they were nervous about currency appreciation. At the same time, earnings overseas, particularly in Europe, started off kind of nice, and then they trickled down a little bit in the mid-quarter, and I think that made people a little bit cautious. At the end of the quarter, they rose back up to their expected level, but they took a little bit of a dip there in the quarter. So for different reasons, international equities didn't perform as well. If you look at small cap international, it was actually positive. So again, that tells you the currency had a big impact because that tends to be more domestically focused, not necessarily export focused. So that held up fairly well, but large cap international equities were down about 1.5, about twice as much as the 75 basis points that we lost on the S&P. Our friends over in emerging markets, again, phenomenal. On a relative basis, 1.4%, quite a bit better than the rest of the globe. Absolute, not great numbers, but still very, very strong performance, and really insulated from some of the issues that impacted domestic and international large cap stocks. They're trading at a discount, they have faster growth. That's part of the reason that's an attractive area. Money is continuing to move there. Well, money was leaving U.S. equities. So emerging markets held up well. International small cap, international large cap, not as much. And the currency appreciation stabilized the last 2 months, and we got a little better performance latter. But for the most part, it was the currency appreciation that really hurt the international equities.